What's up, Momo traders? How's it going? Robbie here, back with another informational video. Before we jump into the video, thank you so much for allowing this channel to grow past 50 subscribers. I really appreciate it. I'm so happy to have you, and you know, in recognition of going over 50 subs, I just want to reiterate and remind all of you what being a Momo trader is. So Momo, once again, means momentum, and so obviously that makes sense for the slogan to be ride the momentum to financial freedoms. When you're a Momo trader, it means that you jump on the momentum of the trend. So whether it's going down, you could short the stock and follow that momentum, or if it's going up in an uptrend, you can jump on and ride it like a roller coaster to make as much profit as you possibly can. Thank you again. I hope more join. Let's make our way to 100 next. Thank you, and I appreciate you being here, and I appreciate your support. So, without further ado, let's talk about the video. So today, I want to just do an elementary level discussion about candlesticks. I want to teach you what they are, you know, and how they behave a little bit and different patterns you can watch out for. But more importantly, like talk about the structure of a candle so that if you are a beginner trader, this video can hopefully help you out with understanding what you're looking at when you look at price action on a stock. So without further ado, let's get into it. Alright, so first off, what is a candle? So the candle, if you have the candlestick pattern set up on your trading platform, basically a candle shows you how the stock is trading within the time frame that you have selected for your chart. If you have a 1 minute, 5 minute, 15 minute, 4 hour, or daily chart, the candle represents that time. So we're going to be talking about just a 1 minute because that's what I use the most when trading. One candle that forms, when it's done and moves on to the next candle, that means that was 1 minute of trading. So let's talk about the structure, and I'm going to put the image of the structure right to the right of me. Let's start off first at the top, and then we'll go down to the bottom. As you can see, the long lines that come off from that main structure, that main rectangular box that you see, those are called the wicks, or they're called tails. I call them tails rather than wicks, but it makes more sense to call them wicks because they are candles. But anyways, I call them tails, and as you can see on the top, that top tail is called the high. So essentially what that means is, because you know, when you're looking at a stock chart, you can see that there's a Y and X axis. The X axis is talking about time, and then the Y is talking about the price. And so the higher you get up on that Y axis is going to be a higher price, rather than when you go low, it's a lower price. And so the high of the candle, or the top line, that wick or tail, that is talking about the highest price that stock traded in that minute. If it, you know, if you see a long tail, it means that it reached a really high price, but then ended up coming back down, but we'll get into that later. And then if you look at the bottom, that's the low. So that's the lowest price that stock hit in that 1 minute of that candle trade. Then the next part, you can see obviously that big rectangular box, and that's called the body. And then the sides that are smaller on the rectangle is either the close or the open. And so what designates whether that top line is the close or the open is the color, and also how the stock traded in that minute. Let's talk about a green candle first. So a green candle is going to have that top side of the rectangle. That is going to be the close. So basically the price that candle closed after that 1 minute, because once again, each candle represents 1 minute. Then on the bottom of that rectangle, that little side, that's going to be the open. And so it's green because the price is higher at the close than it was at the open. So meaning at the beginning of the minute, let's just say it's 9 o'clock, okay, and we're going to 9 o'clock to 9:01 a.m., all right? At the beginning of that 9 o'clock, let's just say the price is at $5, okay? And then it trades for that whole minute, and then at the closing of that minute to 9:01, it closes at $5.10, you know, $5.10. That means that closing price was higher than the opening. So it's going to be a green candle. When you see a red candle, that means that it's opposite. The top is where it opened, and then the bottom side is where it closed. And so that's showing that, obviously, once again, at the beginning of that 1 minute candle, the price was at that $5.10, but then at the close of that, and moving on to the next minute candle, the price was lower. It was back down to 5. Okay, so that can help you see where the price is moving, and then also if there's an uptrend or a downtrend. So very important that you understand that. Also, the length of the whole rectangle shows different things as well, and I'm going to get into that in our next topic. That's called the body, once again, and that makes up the structure. So there's the wicks, you know, high and low wick or tail, and then there's the full body structure, and then the top or bottom of the sides of the rectangle. Next, let's move on to the candle types. All right, so moving on to the candle types, I'm going to put the image right to my right again, just so it's easier for you. But the first type that I want to talk about is a full body candle. And so this shows a strong trend, whether that's up or down. And you can see that that rectangle in the middle of the candle is very long, and the topping tails or bottoming tail or wicks, those are short. And so that's signifying that there wasn't really a question of whether it's going to be a lot of sell-off or a lot of buying. It's for sure, it's a definite thing that if it's a green candle and it's going, that means that it's a strong uptrend, and most traders in that 1 minute were buying. If it's a red candle, that means that it was there was no indecision and it was just a sell-off. And so that is the full body candle, okay? The next candle I want to talk about is a topping tail, or a topping wick, whatever you call it. This candle you can see to the right of me, this candle means that there's, as you notice, there's a tall, really long, high tail on there, or high wick. And so what that means is that there was a lot of buying to make that stock hit that high price, but then it ended, a big sell-off happened within that minute and basically couldn't hold that price. It just touched it and then it went down, and now it's trading at the lows again of that 1 minute trading range. Reverse from that is a bottoming tail, and that is the same type of concept, except it's going the other way. So essentially the price hit down to a level of support or sold off really quickly, but then some buyers were like, no, we're not going to keep it at this price, and started buying in again and ramped that price back up. Next, let's move on to candle patterns. All right, moving on to candle patterns. The first one I want to talk about, and once again, this is elementary level stuff. I just wanted to give you an idea about candlestick structure, as well as a few patterns there to watch out for. The first pattern that you can look out for is called the 3 green knights or 3 red knights, okay? And I know there's different names for a bunch of different patterns. There's a bunch of different, like wedges, or other people like to say bull flags, bear flags. So there's a bunch of different terminology. This is just what I was taught, and this is what I like going by. So, to each his own. Use terminology or different patterns that work out for you. Okay, but this pattern is a great pattern because it shows a strong trend, and then it also shows a possible reversal as well. So basically what I'm talking about is the 3 green or red knights. It means, just remember when we talked about the full body candles, where that rectangle in the middle is very long and there's small tails or wicks on each end. When you see 3 of those in a row, it can mean that there's just a lot of buying. That means that it's in a strong uptrend, okay? And so hopefully you can catch these forming in the middle and possibly get in. And same thing with the red knights, just means that there's a strong sell-off period going down in a downtrend, okay? And this can also mean a reversal as well. When you see like 3 full body red candles and you see the price just dropping very rapidly, if there's a level of support that the price is about to hit, that normally can be an indicator that then there's going to be a reversal, and it's going to bounce back up. The next pattern I want to say too, going along with that reversal, is whenever you see a full body candle and then you see the next candle trading within the range of that rectangular box, that full body, and if it's like, let's just say a red or a green, that can be a big sign of reversal as well. That the next candle is most likely to then, if it's going down and then bounces back up, it can be a good indicator that that once it breaks that next high, it's going to go back into an uptrend. So that's another pattern to look out for. All right, the next pattern is another common pattern that I see all the time, and I try to look out for the best I can. But that is a bull trap or a bear trap. Basically, that topping tail or bottoming tail. These can be really tricky. They can lose you a lot of money. I lost that $2,000 in 11 seconds because of a bull trap. And essentially what it is remember that long wick or that long tail, that high of the price up for the candle. It basically looks, when it's trading in that minute, like it's about to start an uptrend and start just going crazy to the moon. But then unfortunately that long tail goes high and reaches a new high price, but then all of a sudden selling just starts happening, and then the price just tanks and then actually starts a downtrend. So that's a bull trap. A bear trap is when people are short sellers and they're thinking the price is going to go lower and lower, but then they see a bottoming tail, or so that long wick to make a new low, but then the price just rips back up and buyers come in and start moving that price to start an uptrend. Okay, so watch out for those. Those can be very dangerous, especially if you're trading volatile stocks. The price action can be really crazy and rapid. So just be careful of those. That's the #1 pattern that I look out for every single day. All right, and the last pattern I want to talk about, which is the most exciting candlestick pattern, which I love and you should love too because we're Momo traders, is when you see the really long bodied candles. So the full body, you know, green or red. If you're short selling, you would look at the red, but essentially it just means like crazy buying or crazy selling or crazy momentum in either direction. And so why this is exciting is normally it's because of like news, or it could be also because like it might be a new IPO. For whatever the reason is, this can be crazy, and this is where you know, millionaires can be made. It's when maybe news breaks out that maybe you know, a vaccine was FDA approved, or a medication was FDA approved, or maybe a deal or a merger is happening, whatever. There's a bunch of different catalysts or news, but essentially when you watch a stock, it hits your high of day scanner, you look at it and it just is forming these super long bodied candles and in one direction, and hopefully you can get in at a low price and then just ride that momentum. Those are the most exciting candlestick patterns that I look out for. That's why it's so important to watch your high of day scanner, because being able to buy right at the low and ride those up is where you make the most money. Overall, once again, those are just some of the patterns that I look at. Do your own research, and you got to learn a lot more than just that. This is just an elementary level discussion about what candlesticks are, what their structure looks like, as well as a few patterns. So thank you for watching. I hope this helped at all for you beginner traders. If you have any other patterns that you like to trade or any questions about candlesticks, feel free to leave that in the comment section. And don't forget, please subscribe and like and watch my other videos. I do appreciate it. It really helps my channel grow. And then I hope you join the Discord chat so we can chat about stocks. I love doing that with you guys. Thank you for the support. We're over 50, which is amazing. And yeah, I just appreciate you, and I hope more people become Momo traders. I'll see you in the next video.